Upstart is a company that's striving to revolutionize the world of consumer credit. The stock hit an all-time pricing high above $401 per share in October 2021, but it now trades in the $25 range. Upstart's stock price has fallen more than 90% from its highest. So, is this a broken company or just a broken stock? Or, in other words, is this a good long-term opportunity or should you stay away from the stock? Let's finish this video before we decide. Today, we're gonna take a look on the fundamental of Upstart. Upstart started out as an AI lending platform that partners with banks and credit unions to provide consumer loans. Technically, Upstart using non-traditional variables such as education, cost of living and employment to predict creditworthiness. However, instead of provide the loan directly to the customer, Upstart only helped to analyze the creditworthiness of the customer and give it to the banks and credit unions. But, this is the story a year ago, now the company changing their business model, which we will talk about it later. First, let us focus on Upstart plays as what role during the lending process. When the institutional investors want to invest in ABS markets, which shorts for asset-backed security, they will try to find the ABS in the market. But markets might didn't have enough ABS. So, the banks like Cross River Bank or CRB will create the ABS and sell it to the institutional investors. But, how the CRB creates the ABS? The banks like CRB or other credit unions will let the company like Upstart know that there are buyers want to buy ABS. Then, Upstart will go find and approve the customer loan through their AI models. After that, CRB will buy the loans from Upstart or other companies and then packages them into an ABS to sell to institutional investors. Technically, the ABS are financial securities backed by income-generating assets such as credit card receivables, home equity loans, student loans, and auto loans. So, we know that when the customer is not able to repay the loan, it will not causing any effects to Upstart and CRB since they have sold it to the institutional investors. Basically, we can say that the revenue of Upstart is depend on the institutional investors. If they have extra money to invest in ABS market, the revenue of the Upstart will increase. So, when will the institutional investors have the extra money to invest? This have to rely on macroeconomics. After we knew the business model of Upstart, let's have a look on their financials. Here is graph of the conversion rate and number of loans for the recent quarter. What does conversion rate means? Let's take Q3 year 2020 as an example. If there are 100 person apply the loan through Upstart website, Upstart only approve 15 applicants. On the other hand, number of loans are easily to understand. It shows the approved loan of the quarter. As you can see, the conversion rate before COVID-19 was around 15% and dropped to 9% at Q2 year 2020. After that, the conversion rate straight grew until around 23% for the year 2021. CEO of Upstart, Dave Gerard, explained the increase of the conversion rate is because of the AI model they use to analyze the creditworthiness of the customer become more precisely. It sounds fancy and amazing. However, if we see from other perspective, the conversion rate is hardly to increase as much as 5% when the customer base didn't change. Let's take Q4 2020 and Q1 2021 as the example. We assume there are only 100 person apply for the loan in both quarter. Upstart approved 5 more applicants in the Q1 2021. If the risk profile of the 100 applicants still remain the same or not much difference, it is quite impossible to increase so much conversion rate in a single quarter. Unless they have major upgrade in their AI model or changes of customer base. Therefore, I think that the explanation of the CEO is not reasonable. So, what is the reasonable explanation for the increasing of conversion rate? Personally, I think is because of Upstart lowered the requirements of the customers who apply the loan, this will cause the conversion rate become higher. This also the same reason why the conversion rate of Q2 2020 was so low. Because they set the bar high for loan approval. But what is the reason cause Upstart change their approval rate? This is because the demand of the ABS market. When the demand for the institutional funds in the ABS market become higher, Upstart have to find more customer or set the bar low, so that will be more loan able to approve. Hence the conversion rate become higher. So, the conversion rate of Q2 2020 was so low is due to the start of the pandemic. All the institutional funds try to keep cash instead of investing. After that, Fed changed their monetary policy by lower interest rate and quantitative easing. So, the market rally and institutional funds willing to invest again. Therefore, we can say that the conversion rate of Upstart is easily affected by macroeconomics. Until now, the business model of Upstart looks amazing, but why does the stock price drop for more than 90%? The reason is because Upstart changed their business model recently. They starts to lend money to customers instead of transfer it to the other credit unions. This is kind of like banks instead of lending platform. So, Upstart changed from asset-light business model into asset-heavy business model. This will increase the risk of Upstart, especially when their AI model for the loan approval goes wrong. Besides that, Upstart also missed their guide of earning previous quarter. They expect the revenue will be around $295 million to $305 million. However, the revenue of previous quarter only $228 million. There were two factors caused Upstart missed their guided. First, funding constrained, largely driven by concerns about the macroeconomy among lenders and capital market participants. Since the macroeconomy become worse due to the Fed monetary policy, the conversion rate of Upstart also dropped and along with the revenue. Second, they converted loans on their balance sheet into cash and caused negatively impacted to their revenue. Personally, I think this is a wise decision. When the macroeconomy become bad, conserving cash flow is always the correct decision. So, should we invest in Upstart? Personally, I think we can wait for the macroeconomy become better. Then, we just decide whether want to invest in Upstart or not. I think that the reason Upstart lend their money to customer is to prove their AI model in the lending platform. If the result shows their customers are able to repay their loan, this prove the AI model they using is works. By that time, there will be more credit unions want to partner with Upstart. When that time comes, it will become a perfect timing for us to invest in Upstart. If you have other opinions, let's comment below. Please help to like and subscribe.